Thank you for that introduction, Kama. Thank you all for being here. We got one gentleman that popped in, so thank you for being here. So my name is Bridget Ingram. I'm owner of Allegiance Tax Service and B. Ingram Realty, and even my friends don't know this, but I am an ordained wedding officiant. Yeah.
Something else to add to the list.
I'm also a notary.
A party planner.
Okay, Kathy, party planner. all of the above. But I've spent more than 2 decades helping individuals, business owners, and real estate professionals navigate taxes while also building a successful real estate career myself. So today's presentation isn't about finding one more deduction. It's about changing how you think about your business. So my goal here is to leave you with practical strategies that can help you keep more of what you want. Okay, I'm trying to work this screen. How you advance it? Okay, there we go. So the $1 million question is, are you making money or building wealth? And anybody can answer.
I'm making money. I'm trying to build wealth. But I am making money.
A little bit of both. A little bit of both. I set aside what I can and don't touch it.
Okay. All right, so there is a huge difference. Many real estate professionals, they have 6-figure incomes, but still struggle because every commission check is already spent. Who can relate to that? So building wealth requires systems, planning, and intentional tax strategies. How many of you have ever had a great closing and immediately worried about the tax bill? I can say I had a great closing, but I didn't worry about the tax bill, just keeping it a buck. And herein lies the problem.
I never worried about the tax bill until my kids were raised.
Okay. All right. So when you first get into real estate, you're a salesperson, right? But if you want long-term success, you need to become a CEO. So CEOs know their numbers. They review their financial reports. They budget. They hire professionals. Salespeople just chase the next commission. CEO builds businesses. So how many CEOs we have in here? That's right. Okay. So real estate is one of the few professions where the income can be tremendous. The commission income is unpredictable, and that's why systems matter. Real estate professionals who consistently build wealth aren't necessarily the ones selling the most homes. So I want that to sink in. There's the ones managing their money best. I'm trying to see everybody. So one of the biggest questions I always get is, should I have an LLC? And my answer is, it depends. Because an LLC is just liability protection. People think like it's a tax form, but it's not. So your LLC will go on your personal taxes on your Schedule C, unless you're a partnership, and then it's totally different. You file a different form. So it doesn't automatically save you taxes. And they're not the same. So we're going to go to the entity comparison. So a sole prop, which is your Schedule C, there's no liability protection. So if something happens, everything is on you. So this is the beginning, and I usually tell my clients once they hit 50,000, then they'll go to the next phase. LLC is flexible, give you a little credibility, but you're still paying that $800 every year to the state of California, whether you make money or not. S Corp is a pass-through, and it's not double tax. With an S Corp, you're supposed to give yourself a paycheck. A lot of S Corps don't, but you're supposed to put the payroll in place. And again, it's the $800 you pay every year, whether you make money or not. C Corp is double tax. So not only is the corporation being taxed, you're being taxed for whatever money you pull out. But you can raise capital. But again, there's that $800 again. So just think real carefully before you open up the LLC, the S Corp, or the C Corp, because you're going to pay that $800 whether you make money or not. With the nonprofit, that'll be like your mission, your vision. So with myself, I work with young women. We mentor and do scholarships and housing for transitional age youth. So that's my passion is the youth. But with the nonprofits, you have to be on point. Your paperwork got to be on point. You got to file on time because they will revoke it, if you don't file after 3 years. And that seems to be the thing now. And now they're not playing like with the 990s, which are the ones where you don't file the postcard, so you make less over $50,000. They're penalizing people now, and people get large bills, and they penalizing them from the time you miss up until when you file that tax return. And it's like $20 a day if you make under a certain amount. One of my clients got a bill for $5,000 because they didn't file their taxes. So if you're gonna do a nonprofit, just make sure you are in compliance. I cannot stress that enough. All right. So here's the deadlines I was talking about. You might want to take a picture of this because a lot of people don't understand with the partnerships, S Corps, and the LLCs, it's due March 15th and not April 15th like everybody else. So all that changed. Everything used to be due in April, but they made some changes. So March come around, and guess what? You get hit with a penalty again. And they love to give you penalties and interest. I know. So the top are the due dates, and then the white part are the extensions. So if you can't file, go ahead and file that extension. That way you won't get penalized for not filing. They'll penalize you if you owe money, but you won't get that failure to file penalty, which could be steep too. And that's 0.5% of the unpaid taxes per month or part of a month, and it's capped at 25%. So just keep that in mind. But they also charging you interest at 3, but it compounds daily, and right now it's 6 to 7% annually. So don't play with the taxes. So this is the one thing I stress to my clients: do not mix your personal money with your business money. You need 5 accounts: income, operating, taxes, owner pay, and your profit. So please don't commingle, because that's when they'll pierce the corporate veil, and it's not a good thing. So give every dollar a job. So put some in your operating, some in your taxes, pay yourself, and then profit. And keep your books. So the receipts, what I tell my clients is take a picture, put it in your phone, but also do your bookkeeping with QuickBooks, FreshBook, Wave apps. There's a lot of different ones you can do your bookkeeping with, but make sure you do it, please. So stop being surprised by taxes. It's recommended 25 to 30% that you put aside when making money. So you could do it quarterly, you could do it monthly, but just make sure you put something up so when it comes time to pay that tax bill, you're not hit with a large one. And I can talk about myself because I did 6 figures one year and I got a $15,000 tax bill that I'm still making payments on. But that's because I wasn't doing what I was supposed to do. That's why I tell everybody what to do now. Anybody got any questions? No.
I got a comment.
Go for it.
I'm glad you're giving this information because, and I'm not going to have anybody raise their hand, how many people actually have 2 bank accounts that they have We know most people don't have 5. I don't have no 5. I got 5, but it's not operating in that sense. But I'm glad you're giving this information because I have a nonprofit, and I remember asking Bridget about there's a $9.90 and a $1.99. Mm-hmm. And I think I didn't know about the one. Wait, one of them. There's one for the federal, one for the the state, and I was only doing one, and I was able to catch it in time to make sure that those stay filed. But these are things that we should know before we jump into, I want to start a nonprofit, or I want to start another business. Like every business should have all of this, the bank accounts, all of this. It's not just go get an LLC. And that was the point I wanted to make, and I'm done. All I see, and you guys will probably hear it now because we're talking about it, is everybody says go get your LLC. So it's important to talk to a tax person to make sure that you understand it may not be a good fit for you, and you want to know the tax ramifications, because I didn't know about the 800. The 800, do they bill you?
They will send you a bill with interest.
They will? Is it after you owe or before you owe?
They'll send the bill after you owe. So ideally, you're supposed to send the 800 before April 15th or whenever your taxes are due. So if it's March 15th, you need to send them that $800 before then. So if you notice when I do your tax return, you'll get an $800 bill for the taxes we done, and then they'll put it in for the next year because they want you to pay it ahead of time.
Okay.
And then if you don't, of course, California penalizes too. So everybody trying to find some money right now.
Yeah. Looks like Siobhan had an aha moment.
Go ahead, Siobhan.
Okay, that was it. No. She was just when you mentioned that, it was like, oh.
Then gone. I'm already in trouble. I ain't gonna even lie.
Well, I didn't know any of this, so.
Wait, are you taking good notes?
Yes, but I'm not in the LLC thing,
Okay.
But.
Okay. All right.
But it's so good to know.
I have a question.
Sure.
So I have a S corp, but I also have a CPA. So what should I look for to make sure that my CPA is on top of? Pretty much he's, on top of things every year. I do get the reminder to pay the $800 on 15th. So I just want to make sure, because everybody slips.
Yeah, they do. You just make sure that 800 is paid before April 15th. That's the main thing, and that they're filed timely, so you don't get the penalties and interest. But long as you're keeping your books and you're giving it to your CPA, he should pretty much be on top of it, which it sounds like he is.
Thank you.
You're welcome. Any other questions before I move on? Okay. So the S Corp is a tax election that can create planning opportunities when done correctly. So that's where I was saying when you're at a Schedule C and you hit that 50K, then that's when you want to kind of move to the S Corp. So these are the different things you can do with an S Corp, a reasonable salary. What's a reasonable salary? That's for you to determine how much you want to pay yourself. Health insurance. You can write off your health insurance. Your home office. You can use your home office. You can rent it to your S Corp or your corporation. Your vehicle. Your mileage. It's so important to keep a mileage log. If you ever get audited, and us as real estate professionals, we go everywhere. We showing homes, going to title, escrow, this, that, and the other. So keep a mileage log. You can get it at Office Depot or Staples. It's a little book. You can keep the mileage there, or you can keep it on your phone. I think CAR has Erdeler. You can use that. It pretty much keeps up with it. You can go back in your Google Maps. It pretty much tell you everywhere you've gone. You could clock it that way. Your business travel, make sure you keep receipts for everything for that. The purpose, and just set little folders on your phone and put your receipts in there as you go so you don't forget. Your cell phone, I like have a separate line for my real estate business. So I try to keep it separate so I can write that off 100% because it's strictly for the business.
Bridget, can I give a tip for what I've been doing? Because you were telling me about the Google. I didn't have my Google up. So one of the things I've been doing is everywhere I go, I put it in my calendar. That way I know when I put it into my calendar, if I forget to jot it down or what have you, it's there. I can go back and look at the previous month of everything. And my CRM, I use Wise Agent. My CRM has like an accounting sheet. So like when I go to Bridget for 26, I've taken pictures. I put it in my list. I can now just print that out, give it to her without trying to figure everything out. But utilize your calendars as well. It's been a saver. I've been able to with that.
Yeah. Because you have all your appointments in the calendar and everything. So, yeah. And then you can hire your children too. So, but you got to make sure they have legitimate work. Okay? That's the key. It has to be legitimate work. They could be your social media person. They could, clean the office, do the flyers. It's a lot of stuff you can use the kids to do. And you can actually write that off on your taxes. Go for it, Tiffany.
What's the age that they can start doing that, like in order to be written off on your taxes?
You kind of got to check with your local for the work permit age.
Oh, okay.
Yeah, but yeah, because that way they'll get a W-2. You can still carry them on your taxes and they can still file their own taxes if they take taxes out. A lot of people don't know that. They think because their kids work, they can't file them on the taxes if they make a certain amount, but you can still file them, and the kids can file if they're taking out taxes, and they can get their little refund. I do it all the time for my clients, and a lot of people don't know that. All right, so
how about grandkids?
Grandkids? Sure, why not?
Can people hire their grandchildren, or does it any child?
Yeah.
Is it like an extra benefit because it's your child, or it's just a child? Period.
It's just a child.
Okay.
But you will want to do your own child that you carry on your taxes. You know what I'm saying? To write it off and then them write it off and benefit it. So now we talk about deductions. They're everywhere, but you have to track them. So again, this is like marketing, mileage, software, education, MLS, any dues, any of the dues for any association you belong to, you can write off. The client gifts are kind of capped at $25, but here's a little marketing thing I've learned. With your client gifts, in order to write the entire thing off, you put your information on there. So the couple knives where you put your information on there, you can write off the whole thing instead of the $25. So if you give little mugs, as long as you brand it, you can write the whole thing. Because it's marketing. It's a gift, but it's marketing. And a lot of people don't know that. Where are we? So receipts are not bookkeeping. And this is where your QuickBooks, FreshBooks, Wave apps, your different accounting softwares come in. And it's always better to do it monthly instead of waiting to the end of the year. The thing I like about QuickBooks is, let's say you write somebody a check. It'll attach it to the file where you don't have to upload it yourself. So it takes it directly from your bank statement and it puts it in the QuickBooks. So that's extra records you're keeping. So that's what I like about that. But you do gotta have proof. You do have to have proof. All right. So 6 figures in income, but no system. So meet Sarah. She earns good money, but she's stressed. She mixes her accounts. She waits until February to organize receipts. Once she changes her system, everything changes. Not because she made more money, but because she kept more. So I say this to say, Start your tax planning like right now. It's about to be August. So yeah, start your tax planning now. And avoid these leaks. Don't wait till tax season. You know, I have people like, oh, I gotta get all my stuff together, but they didn't plan ahead. And then when they owe money, they looking at me and I'm like, well, what you want me to do? I can't fix it if you didn't do the work. And I do have the option where, you know, if they need to come talk to me in the middle of the year and see, you know, if their deductions are working, we can do that. A big thing is missing 1099 income. So if you make over $600 from a company, you need to declare that income, because I guarantee you they declared it. They might not give you the 1099, but I guarantee you they declared that income. And I've seen it. So we're gonna have proof for our deductions. We're gonna do our estimates. We're gonna plan throughout the year. And you know, your tax professional, they can estimate. They can put a number in and estimate what you need to pay for the year. It's a no-brainer. But if you don't ask, they don't know. So that might be something you want to ask your tax professional. You know, you tell them, oh, I'm gonna make $150,000 next year. Well, how much do I need to pay in taxes? And then you pay those estimated taxes. Again, the mileage log, not tracking your marketing, the wrong entity choice. You know, that's like, okay, well, I'm not making $50,000, but I want to be an escort. Why? Please tell me why. Because you just paying the state of California an extra $800 for nothing. You know, it's not really a benefit to you. All right. So compliance is cheaper than cleanup. Again, if you gotta file late, just file that extension. And for me, like, I kind of know my clients, so I know who's not gonna come, and I'll go ahead and I'll file the extension for them. You know, why you laughing, Kama? So those late payments and penalties will get you. And like on the payroll deposits, say you have employees and you don't pay those payroll deposits, they're gonna ding you. They will ding you, and they will garnish your bank account. They'll go in your bank account and take it because you don't play with the employees' money. I know it happened to me.
Question.
Sure.
About that. So I had did some flipping out of state, and I was paying the worker, and I 1099'd him. Mm-hmm. But I'm getting things from, and I know it's Illinois, so I don't know how that works. No, it's federal. It's federal. Well, I don't know what it is. I forgot. Somebody sent me something, and basically they stated that when I had paid him, they're still asking me to withhold money or something, but I don't use him anymore. That was from over a year ago, but I get these things that says you need to withhold money. And he was a 1099, not a W-2. So is that something that kind of something you're referring to, or is that something
So was he a 1099 with his own business, or was he a 1099
Yes.
under your company?
Ooh, I think we're gonna talk offline. Never mind.
Okay. Because it may
I
have
might owe some more money.
it may have been they're asking you to withhold because he may have a garnishment, or he might have something going on. But I would have to see the letter to tell you.
Okay, he gave me his information.
Uh-huh.
So, and I gave his name. I didn't say under me. So yeah, let's talk about that offline then. Thank you.
Yeah.
Sorry.
And with that, when you work with contractors, you kind of want to have a contract in place, so they'll know that he's not an employee of your company. And that's what happened. I had a client. They own the trucking business, and they were paying them 1099, but they should have been employees. And there's a test out there that you can do. Do you make their schedule? Do they use your equipment? Things like that. If they do, then they're considered an employee. But if they have their own business, then you can 1099 them from your business, as an independent contractor. So a lot of people don't know that. It's just like, oh, I'm gonna give them a 1099, but you don't really realize what you're doing. So that's where the contracts come in place, because it's to protect you. Because once EDD get a hold of you, it's a wrap. Yeah, it was a 5-figure bill for them. So yeah, but that's why I'm here. So here are some of the things you can use. The 100% bonus depreciation, the Section 179, the 199A, business credit. Some of them are phasing out, and it just depends on the year. And then the 1099 threshold. So if you pay them over $600, you need to have some kind of contract with them. You know. That even goes for your agents. So you have that independent contractor agreement. You need to keep those in your files. But you also need to file those 1099s to protect you, because what'll happen is they'll report the money and you don't, and then you'll be the one in trouble. Yes, Siobhan.
What about like?
I can't hear you, babe.
Oh, can you hear me?
Now I can.
Oh, okay. So, like with your TC, when you have a TC and you paid them over $600 for the year, are you supposed to be giving them a 1099 fee?
It depends on how you pay them. So I usually just have escrow pay them, and then I don't have to 1099 them.
Oh, okay.
Yeah.
Okay. All right.
It depends on how you pay them. If you have escrow pay them, then you're good. If you pay them, then it's like you should kind of have a contract with them. But again, it just depends on how you pay them. Okay, so here's some stuff I want you to do for the next tax season. Clean up your bank accounts. If you commingling, stop today. Review your entity structure. Set tax percentage aside, start your monthly bookkeeping, and then book quarterly planning. And your tax professional should be open to you talking quarterly, just to see where you are. That shouldn't be a problem. That's it. I'm done. Any questions?
Well, are we able to get a recording of this session?
Yes.
Yeah.
So what will happen is, if Bridget is okay, we can get a copy of the slides. If you are a realtist, you are going to get an email through the CAREB, through CAREB's, the state's virtual assistant. He'll send out an email, and usually in the email it will have the slides as well as the recording. And what will happen too is, if not, you can go onto our YouTube page, just search under the California Association of Real Estate Brokers. All of our trainings for the whole year is there, and this training is usually up within a week or so. The VA will have it up then, so you definitely will get a copy. I mean, yeah, can we get a copy? Okay. So yeah, you'll definitely have the information and the recording.
And then if you have any questions, let me put the QR code.
While she's putting it up, are there any more questions or comments? Anybody want to share a few takeaways? Hey, Tori. Tori's one of my agents. Let's see. You pause, Tori. There
Hello.
Hey.
Hello, everyone. I just want thank you for this opportunity. Miss Bridget, she's a lifesaver. Okay. Did I pause again?
A little bit, but we can hear you. It's just a little choppy, but we can hear you.
Okay. So Miss Bridget, she's still saving my life. My mom, she started a nonprofit. She was a realtor with C&D Realty Services as well. She passed away. It'll be 2 years next month. And in my spirit, I just wanted to keep her legacy going with this nonprofit. And Miss Bridget, oh my God. When I tell you, I'm sorry. I was getting on her nerves because I was like, Miss Bridget, I need help. Like, she was there for me. And she's still, okay, when I call, text, do this. She's just so calming, okay? And she's very direct. She's amazing. I just want to say thank you so much, and I really appreciate you. I have these are jewels for everyone, for your business, for the future. We could each one teach one, and so I really appreciate you because this is helping me even more. So thank you, and you're gonna hear from me a lot more. I'm sorry.
No worries. I'm here.
Thank you so much.
Hearing that, Tori.
I appreciate it. Thank you, Ms. Kama.
You're welcome. These are real life testimonies. I told you she helped me. She's still helping me. Any other questions?
Yeah, Kathy have her hand up.
Oh, Kathy.
Oh no, she don't. That's my thing. I'm sorry.
Me?
It was my mom. I thought you had your hand up.
No, it was just, I didn't know any of this. I learned so much. I'm really glad I was on this. Not that I need all these things. I'm not a nonprofit. I'm not the S Corp and blah, blah. But it's such great information.
Thank you.
You're so knowledgeable. I'm so impressed. I've known you for so long, and I didn't know all this. Anyway, I'm so proud of you.
Thank you.
All right. Well, what I do want to share is, as we're coming to a close, for one, I want to thank you all for coming on. This is, again, for those that came in a little late, this is our first time doing this after hours per se. Our goal is to try to reach each and every one of our CAREB members, which CAREB stands for the California Association of Real Estate Brokers. We want to be able to reach our members. I see we have Don Jordan on. He's on our education committee as well, and he's really passionate. I know I owe you a call, Don, to get you some information. But our goal is to help build, for one, our mission is democracy and housing for all. And for those that are not members of CAREB, it's like I'm doing the altar call or something. For you guys that are not in a part of the California Association of Realtors, we have boards literally all across California. We have people on from Sacramento, Sharon from Sacramento, Diane, who was on earlier, she's from Sacramento. We have Oakland, we have Inland Empire, Long Beach, LA. I mean, we have them all over, and we want you to, if you're not a member, to find a local board to get involved, because there's a lot of great benefits that come with it. So make sure, if you're not a member, reach out to me, and we will definitely find you a board home. We are already ready for our 2027 dues. So if you start paying now, it will cover all of 26 and the remainder of 27. They just opened the portal, kinda. So please get involved. So you got like a year and a half of being a realtist. So if you want to get involved, please let us know. This Saturday, we will be going to, many of us, and I don't know if they still have tickets, we're going to Vegas. If you guys can see, Bridget, can you share your screen for me?
I can. And Miss Sharon had unmuted. I think she wanted to.
Oh, Sharon, please. Sorry.
Yes, I wanted to say this is very good information. Very good. I'm on the right track, but I'm so old school. I don't think anybody else has ever done my taxes. I do them myself.
Oh, okay.
And I've gotten it so that, I do like at least 7 transactions a year, and I've gotten it to the point where I only have to pay like $900. I've just worked it. There was a time when I was paying thousands, so
yeah.
But I whittled it down. And the commingling thing, I need to get that right, because I have everything all mixed together. So thank you so much for the information. It's good.
You're welcome. So that means next time I see you, you're gonna have separate bank accounts.
Well, I have separate bank accounts. I have a couple of business accounts there, a couple of business accounts there that I use for certain things, and sometimes I pay business things out of my personal account. So they're not set up the way I took a picture of it, the way that you suggested. So I'm going to try that. Thank you.
Oh, yeah. You're welcome.
Yeah. Thank you for that takeaway. uh,